Gold bullion sinks with stocks as Bank of England, ECB join Fed in raising rates. Gold bullion prices fell sharply in Asian and London trade Thursday, hitting multi-week lows 2.5% below Tuesday's spike as the UK's Bank of England and the European Central Bank both followed the US Federal Reserve in raising their key interest rates by half a percentage point. Despite all three rises being slower than the Fed, ECB and Bank of England most recent hikes of 0.75 points, and despite pundits, analysts and traders all expecting half-point moves as delivered, global stock markets also dropped, extending yesterday's late fall on Wall Street and pulling the MSCI World Index down another 0.4%. The Fed is strongly committed to returning inflation to its 2% objective, said the U.S. Central Bank in Wednesday's policy statement, raising overnight dollar rates to a ceiling of 4.50% in the face of 7.1% consumer price inflation. Further increases in bank rate may be required for a sustainable return of inflation to target, said the Bank of England this morning after raising UK rates to 3.50% in the face of 10.7% inflation. Keeping interest rates at restrictive levels will over time reduce inflation by dampening demand, the 19-nation ECB then said Thursday lunchtime, raising the annual returns paid on commercial bank deposits to 2.0% in the face of 10.0% inflation. Two members of the Bank of England voted for no change at 3.0%, and one voted for a second 0.75-point hike. While new forecasts from the U.S. Fed's Policy Committee now say 2023 will end with short-term dollar rates at 5.1% per annum, betting in the futures market went the other way overnight, raising the odds of next year finishing with rates at or below today's ceiling of 4.50% at better than 2 in 3, the strongest such reading on the CME's Fed Watch tool for more than 2 months. The dollar rallied a little from yesterday's new 6-month low against the rest of the world's major currencies. That still left the DXY raising well over half this year's 20% rise to the 2-decade peak hit in late September. Gold bullion dropped to $1,775 per ounce, its lowest in more than a week, and $50 below Tuesday's 5-month peak following weaker than expected US inflation data. The UK gold price in pounds per ounce touched 6-week lows beneath £1,440 as sterling rose on the Bank of England news. Euro gold bullion prices also hit their lowest since end October, dropping to €1,667 as the Euro Stoxx 600 index of the wider region's stock markets lost 1.7%. Broadly into 2023, Reuters quotes Singapore bank OCBC's foreign exchange strategist Christopher Wong, "I still favor gold to trade higher. But near term into end year, I won't rule out any profit-taking or pullback in prices." Wednesday saw giant US-listed gold ETFs the GLD and IAU both shrink in size, while the SLV Silver ETF also saw net liquidation by investors, with its number of shares in issue shrinking by 0.4%. COMEX futures and options were also muted, with the daily trading volume in gold derivatives falling by 80% from Tuesday's spike when gold prices jumped to 5-month highs on the weaker-than-expected US inflation data. Volumes for the other precious metals also fell back to pre-inflation data levels, down 52% in silver futures and options, 18% in platinum, and 41% in palladium derivatives.